Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Thursday, March 24th. Stocks on Wall Street are building on yesterday's gains as investors digest another rise in oil prices, Europe's latest sovereign debt woes, another wave of corporate earnings, and some mixed economic data. First to the economic news. Orders for durable goods fell 0.9% last month, their biggest drop in 4 months. Lower sales of machinery, defense-related products, and transportation were largely responsible for the decline. Economists had been expecting a 1.5% increase in orders, following a 3.6% jump in January. Separately, first-time claims for unemployment benefits dropped by another 5,000 last week, roughly in line with estimates. The drop brought the 4-week moving average of jobless claims down to about 385,000, the lowest level since July of 2008.
Investors seem to be taking the news in stride and instead focusing on the day's corporate earnings. Shares of Best Buy are rising about 1%, despite a decline in quarterly sales and profit. The electronics retailer also lowered its forecast for the full year because of challenges in the macro environment. But the results were better than analysts expected. Best Buy's online rival, Amazon.com, is gaining 2% after an upgrade from William Blair. The analyst also cut its rating on Walmart and Target. Meanwhile, ConAgra topped estimates despite a 6% drop in fiscal third quarter profit. The food giant also affirmed its earnings outlook for the year, and its shares are modestly higher in early trading. Elsewhere in the industry, Tyson Foods and Smithfield Foods are both gaining about 3%, following stock upgrades from BB&T Capital.
Another sector in focus today is technology. Shares of chipmaker Micron Technology are jumping more than 6% right now. After yesterday's closing bell, Micron topped estimates despite a big drop in quarterly net income, and revenue rose to $2.3 billion. Another winner among tech stocks is Red Hat. The software maker is surging nearly 14% after far surpassing Wall Street forecasts with its profit and sales figures. After today's closing bell, we'll hear from Red Hat's rival Oracle, as well as BlackBerry maker Research in Motion. And one more company to keep an eye on today, AT&T. Bernstein upgraded the telecom giant to outperform after its acquisition of T-Mobile USA, and the stock is rising more than 1%.
All that strong corporate news is also outweighing another rise in oil prices this morning. Crude is now trading at around $106 a barrel, after closing at its highest level since September of 2008 yesterday. The market is now pricing in the long-term loss of Libya's 1.6 million barrels a day, as the U.S., UK, and France continue their airstrikes against Muammar Gaddafi's forces. Traders are also concerned about supplies from the Middle East as the violence in Yemen and Syria escalates. The BBC reported that at least 10 people were killed after Syrian police opened fire on demonstrators. Oil prices may also be supported by a decline in refining capacity in Japan, which is still trying to assess the damage from the earthquake, tsunami, and partial nuclear meltdown earlier this month.
And we'll finish with one more area of the world causing concern today, Europe. Right now, EU leaders are meeting in Brussels to discuss economic policy, following the failure of Portugal's government. Yesterday, Parliament rejected austerity measures designed to reduce the country's deficit, and Portugal's Prime Minister resigned following the vote. Now, investors expect Portugal to ask for a bailout of tens of billions of euros from the EU and International Monetary Fund. Greece and Ireland have already been forced to take bailouts to meet their own debt obligations. And Spain may be the next domino to fall. Moody's Investors Service cut the senior debt and deposit ratings of 30 Spanish banks, following its recent downgrade of the country's sovereign debt rating. All these problems are casting doubt on Europe's efforts to control the debt crisis. But the euro is somehow maintaining its strength through it all, now trading slightly higher against the US dollar after an earlier decline. That's the latest from Weiss Research. Have a great trading day.